This is the best U.S. comp that they've done in 36 quarters. I mean, there was a little bit of benefit from SNAP, but that would be the first thing. The second thing would be that the core U.S. operating profit had its best quarter since the second quarter of 13. And people should not be dismissive of that, because they're definitely at a tipping, or I guess an inflection point, in terms of getting leverage and actually having flow through in the core U.S. business while they're continuing to invest in price. And I guess what I would say is, I look at my coverage universe, there are very few names that I cover where investors are conditioned to understand that gross margins will be down, but very few companies that are as far ahead as Walmart is in terms of having an ability to get leverage on operating expenses. And that can be a very powerful model combined.
Neil, is the Walmart a company you like?
Yeah, I think so. If you look at the consumer and amount of people that are getting jobs, it's not the high end. So it's the middle America, and that's where they're going to shop, is a Walmart. When you take Walmart and you just stack it up and you look at their price of sales, which is about 0.5, but interesting enough is, do you want to own a 30-year treasury, right? Guaranteed 2.9%. Or buy Walmart, that's raised their dividend 46 consecutive years at 2%? I'd rather buy Walmart.
And Karen, people have said, well, you know, we've got Amazon, who's obviously doing as much as it can to get product to most of the country as quickly as possible. Even with all the investment it's doing, can Walmart keep up?
I mean, absolutely. Think about it. You know, no retailer has the dominance that Walmart has in food. Obviously, they're the #1 food retailer in the country. That means that they have a frequency play that Amazon just doesn't have, and frequency from their perspective that people are going to their stores to buy food and are then generally buying something else that's in discretionary. So that's a very powerful advantage that Walmart has against Amazon. But more importantly, or equally important, you know, Amazon has not solved for same-day or 2-hour delivery, and that's what Walmart's doing. And I think that's an underappreciated competitive advantage that will continue to build as Walmart gains more and more experience with these delivery tests that they're doing.
Karen, all that said, it's trading around 103, 104 today. Your target's only 113, is that right?
It is. I mean, I would say that, you know, looking at guidance, I just to comment on guidance, if you notice, they've kind of beat and raised 2 or 3 quarters in a row, yet they haven't changed their actual guidance, which is off of a % growth as opposed to an actual earnings number. So, I mean, I would argue that maybe consensus or guidance, sorry, is a little bit conservative. And we raised our price target consistent with what was changed in terms of EBITDA or EBIT and EPS.
All right. And Neil, finally, you mentioned you like Casey's General. Walmart is attractive here. Does that mean pretty much all of retail is open for business as far as you're concerned, or only the ones who are showing that they can be good operators in this kind of environment?
I think any company has to be a good operator in any sector that you happen to be in. Just because one sector is running doesn't necessarily mean you're a good operator. But you're not playing with a child here. It's sort of what Karen was saying. They get that impulse buy like Costco. That's why they keep moving the merchandise around, but you're going in for food. And so Walmart, you know, is a well-known company and going to continue to grow, in my opinion.